When you think about insurance, your first thought probably isn't, wow, what a fascinating story, right? It feels more like a bill you have to pay. But what if I told you that it's actually one of the most powerful and creative inventions in human history? It's a story all about how we, as a society, decided to tame chaos and literally put a price on peace of mind. Let's dig in.
And really, that's the core question, isn't it? This is what insurance forces every single one of us to think about. How much are you willing to pay right now, today, to protect yourself from some awful what-if that might happen tomorrow? It's way more than just a financial calculation. It gets right to our basic human need to feel secure in a world that is, let's face it, pretty unpredictable.
So at its most basic level, insurance is just a contract, a really powerful one. You pay a fee, that's your premium, to a company, and in exchange for that fee, they promise to cover your back if something specific goes wrong. The genius of it is transferring your personal risk to a giant pool. Simple idea, right? But getting here was a long and fascinating journey.
So where does this story even begin? Well, it wasn't about protecting our health or our lives. Nope. The earliest forms of insurance were all about protecting our stuff, specifically the ships and cargo that were the absolute lifeblood of global trade. The core idea of sharing risk, believe it or not, has been around for thousands of years. Way back in ancient Babylonia, you had lenders who would essentially forgive a loan if a merchant ship was lost or robbed, but they'd charge a much higher interest rate for the privilege. It was a risk premium. But the kind of insurance contract we'd recognize today really started to pop up in 13th century Italy. By the 1600s, the whole operation had moved to, of all places, London's coffee houses. These became the hotspots where merchants would literally underwrite their name on a policy, each taking a piece of the risk for a voyage.
And that brilliant coffeehouse mono? It didn't stay in London for long. It hopped right across the Atlantic to colonial America. Port cities, especially a booming place like Philadelphia, became the new hubs for this. You could walk into a coffeehouse there, and it would be buzzing with merchants doing the exact same thing they were doing in London, sizing up the risks of a voyage and putting their money on the line.
For a long, long time, the biggest risks were out on the open ocean. But as cities started to grow bigger and more crowded, a totally different kind of threat started to emerge. And this one wasn't a world away. It was right outside your front door.
13,000. Just think about that number for a second. That's how many houses were wiped out in the Great Fire of London in 1666. It was a wake-up call of epic proportions. It proved that a catastrophic loss could happen to anyone, not just sailors and merchants. And that single, devastating fire, it directly sparked the creation of the modern fire insurance industry.
And of course, this idea found a home in America pretty quickly. And who was one of the key figures behind it? None other than Benjamin Franklin. He looked at the crowded wooden buildings of Philadelphia and saw the exact same risk. So in 1752, he and some other civic leaders got together and formed the Philadelphia Contribution Ship. It was America's first successful fire insurance company, and it was basically a community project where all the policyholders owned the company together.
Okay, so we figured out how to insure ships and houses. The next step was a monumental leap, and honestly, a pretty controversial one at the time. What if you could insure a person's life? This was a game-changing idea. To get why this was so important, you have to understand how society was changing. In the old agrarian age, your family's security was the land you owned. But then, the Industrial Revolution came along and changed everything. People moved to cities, and suddenly their most valuable asset wasn't a farm. It was their ability to go to work and earn a paycheck. And that created this brand new, terrifying risk. What happens to your family if you, the breadwinner, suddenly die or get hurt and can't work anymore?
And Ben Franklin saw this contradiction perfectly. He pointed out how strange it was that people would insure all their stuff, their houses, their ships, but not the one thing that made it all possible, their own lives, their ability to earn a living. For a lot of people back then, putting a dollar value on a human life felt wrong, almost like gambling. Some even thought it was sacrilegious. It took a real cultural shift before people started to see a person's future income as something tangible you could actually insure.
And then came the big breakthrough. In 1843, the Mutual Life Insurance Company of New York was founded. This was huge because it was the first company to offer life insurance to the general public, not just specific groups like sailors or clergymen. This was really the moment the modern life insurance industry in America was born.
All right, let's fast forward to the 20th century, because this is where the pace of change just goes into overdrive. The world got more complicated, and with all that new technology and complexity came a whole bunch of new risks. The insurance industry was basically in a constant race to keep up. And you can just see the explosion of new insurance types right here. The invention of the car? Boom, you need auto insurance. The rise of huge factories with dangerous machinery, that led directly to workers' compensation. And as big corporations became the main employers, they started offering group life and health policies, which completely changed how most Americans get their insurance coverage even today.
And as the risks got more modern, the contracts got way more complex. We're a long, long way from a simple signature in a coffee shop. Policies turned into these dense legal documents, spelling out every little detail, from who's liable in a car crash to exactly how much you'll get if your car is totaled. Every new invention required a whole new rule book.
But then, in the late 20th century, the scale of risk reached a whole new level. Disasters like Hurricane Andrew in '92 caused such incredible damage. We're talking over $16 billion that they literally drove some insurance companies out of business. And then came 9/11, with insured losses of more than $40 billion. These events were so massive, so beyond anything the industry could handle alone, that the federal government actually had to step in and create a safety net, like the Terrorism Risk Insurance Act.
And that government intervention really shines a light on this central question that's always been there for the insurance industry. When you have a system this big, this important to the entire economy, who should be in charge of regulating it? Should it be the individual states, or should the federal government call the shots?
This was a legal tug-of-war that went on for the better part of a century. Back in 1868, the Supreme Court said insurance was not interstate commerce, which basically meant states were in charge. Case closed, right? Well, not exactly. Because in 1944, the court did a complete 180 and said, actually, yes, it is interstate commerce, and the federal government can regulate it. It threw the entire industry into chaos.
So to clean up the mess and provide some clarity, Congress stepped in. A year later, in 1945, they passed the McCarran-Ferguson Act. It was a compromise that essentially gave regulatory power back to the states, saying that having the states in charge was in the public's best interest. And by and large, that's the system we still have today.
And the stakes in this whole debate are just enormous. I mean, look at this number. The U.S. insurance market is an absolute giant. It accounts for about one-third of all the insurance premiums paid in the entire world. It's a cornerstone of our financial system.
So, from those simple loan agreements in ancient Babylon, all the way to the incredibly complex policies that now cover things like cyber attacks and climate change, the story of insurance has always been one of constant change. It's an industry built on this wild idea of predicting the future. But as we look ahead at a future filled with risks we can't even imagine yet, the biggest question is, how is insurance itself going to have to change next?